Well, thank you. I'm Joe Evans, partner with RSM. I can't stand up there. I have to be moving around. I have all this excess energy that I have to work off. So if I did anybody sweat, just let me know. I wore the gray suit this morning because it matches my hair. Everybody else is blue, and I had to be a little bit different. But anyway, we're here to help you. I think the most important thing today is remember that email address. Write it down right now, hga1009@rsmus.com. That is an email that will come to us. You can ask us your questions. You can make comments about the law or share things with Paul's office. But it's a dedicated website that was set up for this particular purpose. And as Paul mentioned, and Ernie earlier, we have lots of experience doing this. We have hundreds of clients around the state, around the country. But in the state, we also do a couple of big clients. And one of them is Interfund, the Indiana Public Employee Retirement System. We've been doing that audit for a number of years. And many of you may have seen some people at your offices doing payroll audits. And that is part of the Interfund work that we're currently doing. So before I get into this, just to gauge, how many people here have prepared GAAP financial statements in the past or are familiar with governmental GAAP? So about half of the group. If I'm going too fast or too slow, tell me to slow down or speed ahead. This first section, the morning session, is more a review of governmental accounting principles, governmental GAAP, and then the afternoon we're going to get into what the format of the financial statements will actually look like. So, one other thing too, before I get into this, people who want CPE, make sure that you have signed in. It's very important. You get 6 hours of governmental CPE for this session, and so make sure everyone is signed in. So what does full accrual GAAP financial statements, what does it entail? Okay. Oh, there's some, right up here is fine, ladies. I asked for an easel, so they were kind enough to find one for me. Thank you. Okay, so full accrual financial statements, MD&A, Management's Discussion and Analysis. Does anybody remember that from back in the day, MD&A? You talk about in the private sector, corporations are preparing MD&A, which explains the financial statements and talks about the trends and the movements. We also have something called modified accrual fund statements. Those are the individual fund statements summarized. Then we have full accrual entity-wide statements. That is on the full accrual basis, requires all your receivables, payables, capital assets, debt, everything to be recorded. And then, to further complicate matters, we have to have a reconciliation of the two. So we're reconciling the full GAAP entity-wide to the modified accrual. Statement of cash flows, proprietary funds. So our proprietary funds that operate like a business entity, we have to have a statement of cash flows. Full footnote disclosures. So the footnotes are extensive. We're going to go over the footnote disclosures this afternoon. RSI, required supplementary information. Information about the pension and OPEB and our budget, the actual comparison has to be included in RSI. And then, of course, receivables, payables, fixed assets, debt, all of that stuff. Do we have a marker here? Oh, okay, great. So, why are our financial statements so complex? Here it is. We have the citizens. Then we have the governing board. Then we have the investment community. So all three of these individuals have an interest in our financial statements. And so the way the reporting model has to be so complex, what we call GAAP, generally accepted accounting principles for governments, incorporates the needs of all of those individual users. So, as Paul mentioned earlier, with our cash basis statements, we're not incorporating the needs of all of those individual users. So the GASB, who is the Governmental Accounting Standards Board, the rule-setting body, came up with this model that's designed to incorporate everything we need. Okay, so now, just to talk a little bit about the reporting entity. So the primary government is will report the governmental activities, business activities, and then we have to incorporate component units. So a component unit can be blended, it can be discrete, and then inter-entity transactions with blended component units need to be eliminated, and primary government versus a component unit. So most cities and towns are considered primary governments, most schools, but if you have, I think Paul mentioned there was, airport districts, or there's other related entities, each need to be evaluated to determine if they should be included within the reporting entity or not. As far as the benefits of full accrual goes, Paul talked a little bit about this, but it makes us more comparable with other governments. It's more of a truer picture of compliance. So if you think about monies that are restricted for a particular purpose, then we have to account for those monies within a particular fund that shows compliance with those restrictions. It eliminates variances in the timing of cash payments. Paul mentioned earlier about a government that sat on cash for quite some time to make their ending balance, or sat on bills to make their ending balance look pretty good. You can't do that under the full accrual method. Bondholders and investors, of course, was talked about earlier. The GFOA certificate is something that's awarded to governments that meet particular standards, including all of the GAAP reporting standards. So that's another consideration. And then it really serves all the constituents, as I put in my diagram. It really tells everyone who's involved what they need to know. So, the essential characteristics of financial data, it needs to be understandable, reliable, relevant, timely, consistent, and comparable. So, a lot of people talk about accounting versus financial reporting. And we can start here again. This is not really in the slides. But accounting refers to the accumulation of data in a systematic format. And we're all doing that right now. And if you're following the state board's chart of accounts, you already have an accounting system that pulls together a lot of good data. But there's a big difference between accounting and financial reporting. Financial reporting is the concept of pulling things together so that we can tell the world a story. And being able to tell people what they want to know and what they want to see. So we have to change our way of thinking a little bit from not just doing the accounting, but from financial reporting and doing what our constituents want to see. So in the governmental environment, things are a little bit different than in the private sector. Private sector, we have the profit motive versus government is more of the service motive. So with the profit motive, the bottom line is everything. To a corporation, it's stockholders' equity, it's earnings per share, it's financially driven. Return on investment is key in the private sector. Whereas in the governmental world, it's more like what services did you provide, what are the costs of those services, stewardship and compliance, demonstrating those particular characteristics. We have, in many cases, our budget is a legal document, and it represents an appropriation that we have a legal spending limit. Whereas in the private sector, a lot of times you see a financial plan, it's not legally binding, it's something that can change and is more fluid. We have this concept in government of measurement focus. We have the full accrual and the modified accrual. We're going to get into what those details are, but there's different measurement focus. We have the concept of fund accounting, which you don't see in the private sector. So it's these environmental issues that really make a big difference in the reporting model for governments. When you consider the environment that we're trying to accomplish, then that really, really drives where we're at with our reporting. Okay, what is fund accounting? We want to present our activities in accordance with generally accepted accounting principles. So we need separate funds that will demonstrate legal and contractual compliance. And what is a fund? Well, it's a self-balancing set of accounts that's been segregated for particular activities. So each individual activity will require a separate fund. The number of funds should be consistent with legal and operating requirements. Let me just read you the third principle of governmental accounting. States that you should establish and maintain funds required by law and sound financial administration. However, only the minimum number of funds consistent with legal and operating requirements should be established. So what that's telling us is we have to set up these funds, but we don't want to just set up a fund for anything we think we want to have. We want to follow the law, and we want to have funds that are required by law or by sound financial practices. So we're going to talk about the number of funds and how we set them up in a minute. But before that, there's different categories of funds. There's governmental funds, which are activities supported by taxes, grants, and similar things. So we're going to have special revenue funds, a general fund, we're going to have a capital fund. Those are all governmental funds. Then we have proprietary funds, which are business type activities. So our utilities typically usually fall in that category. And then fiduciary funds. So resources that belong to others are going to fall into the fiduciary category. So most commonly you see there is the pension funds. The agency funds fall into that category. So when we're talking about how to balance our fund, all of our assets plus our deferred outflows minus liabilities plus deferred inflows equals fund balance. So let me just talk for a minute about the number of funds. I said, it's required by law and sound financial administration. We want to have a minimum number consistent with legal and operating requirements. I talked a little bit about distinguishing between accounting and financial reporting. Again, we want financial reporting reporting to address the needs of all of the parties that are involved, address the needs of the investment community as well as the governing board. So we may want to combine certain funds for financial reporting. So let's get into the fund types. So the various fund types, again, within the governmental fund, we have the general fund, which is the main operating fund. We have special revenue. Special revenue funds are going to be set up for any specific revenue source that's earmarked for a particular project. Capital projects funds are there to account for the proceeds of debt typically or other resources that are used for capital. Debt service funds established for the payment of debt. And then permanent funds within the governmental fund type are funds where the corpus cannot be spent, but the principal, the principal or the corpus cannot be spent, but the earnings can be used for governmental activities. And the key thing there is the earnings have to be used for governmental activities. An example would be like a cemetery fund, where money is set aside and the earnings are used to maintain the cemetery. Proprietary funds, we have our enterprise funds. And an enterprise fund, typically there's a fee for service. There may be some debt associated with a particular activity. Or, you may have a situation where the activity is designed to cover its own costs. It's designed to break even or even make a profit. Those are typically set aside as enterprise funds. An example, again, is like utility, maybe a bus system might fall under that category, provided that a substantial amount of the revenues come from the operation of the system. Internal service funds are used to allocate things. Typically, you might see insurance or other activities that need to be allocated to various funds throughout the entity. Fiduciary funds. This is where we're acting as a trustee capacity. So the government is kind of a trustee. The pension funds is the most common in this area. And those of you that participate within INPERS, the assets are being held by INPERS, so you wouldn't report that as a pension fund. You would just have disclosures. The only pension funds you would report is if you had your own fund, your own pension fund. I think some of the counties might have a separate pension fund for certain employees of that fund, of that organization. Investment trust is where assets are set aside for investment purposes. Private purpose trust, endowment funds, where we're holding assets for others, as opposed to the permanent fund where we're holding assets for the government. And then agency funds, again, we're holding assets for others. An example there would be like in a school district, if the children raise money and there's a great deal of money held by the government on behalf of the school activities, that would be put aside in an agency fund. So the next slide, what I'd really like to do is let's flip to the chart, the instructions from the State Board. And this is not in the materials, but I wanted to go over this because this is really a good piece of information. So what I have on the screen is it's called the Accounting Plan and Procedures, and this is for cities and towns. And there's a similar one, I believe, for counties and schools. Is that correct? In the State Board? Yes. But this is really a good piece of information for all of you to have in terms of, looking at your accounts, how are your accounts set up? How are your funds structured? There's a lot of really, really good information in here. So the first thing I wanted to point out, okay, so under the numbering structure, we have the fund type. Fund types numbered and titled pursuant to types suggested within the governmental, accounting, financial reporting manual. Then we have the fund name, organization unit, and chart of accounts. And then this goes on to explain what each of those categories are. Again, this is a very good tool to make sure that your fund structure is appropriate under the circumstances. Can we skip to 31? Oh, sorry, nope. Let's go to 5. Okay, so here we have suggestions as for the general fund, and then a whole laundry list of special revenue funds. Then as we move on, there's a list of debt service funds and capital project funds. And when this was set up, the concept was each one of these funds is required by law. But for financial reporting purposes, we don't want to have a financial statement that has way too much detail. And we want to be able to consolidate certain funds that are related or make sense to consolidate because of their nature and circumstances. So, one of the first decisions that we're all going to have to make is to take a look at our individual funds, see how many we have, and see where it makes sense to consolidate those. And so, in discussing this with the state board, the capital area is one area where we may have just a whole laundry list of capital funds that we may want to consolidate so that we're reporting only one capital fund within our financial statements. Same thing with the debt service funds. I want to scroll down, scroll back up, I'm sorry. A lot of those may be able to be consolidated for financial reporting only. The accounting, we're still going to keep them separate for accounting purposes, but for financial reporting, it might make some sense. Scrolling ahead, in this particular case, the water utility here shows 5 separate funds. And that's probably because there's a bond issue and we have to track monies within each one of those individual categories. But again, for financial reporting, we're only going to want to report one water utility, and then we have to disclose how much is in the bond and interest fund, how much is in the depreciation fund. We would disclose that separately. Same thing with the sewer and electric utility and the gas utility. All good information here, but again, too much for financial reporting. So again, it's going to take some judgment as to how these funds should be combined. And this is an area where you probably want to take a first pass and come up with your own ideas as to what should be combined, and then maybe run it by the state board or send an email to us at HEA 1009, and we can have a discussion about what makes sense in terms of combining funds. Let's go to 31. So a lot of people have asked me, where do I get started? Well, this document has just tremendous information, and it's a good place to start. So on page 31 of this document, it's showing what a fund statement would look like under modified accrual accounting. And so across the top, you have your governmental funds, your general special revenue, debt service, capital projects, your proprietary funds, so your enterprise and internal service, and then your fiduciary funds. And then on the left side, this will be the balance sheet showing your assets, investments, taxes receivable, other receivables, capital assets, so land, infrastructure, buildings. So your depreciable assets, one thing to note, your depreciable assets need to be segregated from your non-depreciable assets. So then moving on to the next page. We have our liabilities. And then moving on to the income statement. Taxes, license and permits, intergovernmental revenues, all of these are typically rolled up for financial reporting purposes. And you can see from this example, all of the details roll up into these summary accounts. Now, the one thing that's not included in here is deferred outflows of resources and deferred inflows of resources. And where you're going to see that typically is with your property taxes, to the extent you have unavailable revenue. I'll get into the meaning of that later, but that's going to be a deferred inflow of resources, and that will be reported within the liabilities section. Just scrolling down to the expenditures. So we have our expenditures reported by object and function. So we have everything we need to get to our reporting requirement of reporting our expenditures within the various functional categories. As far as your budget goes, if your budget is set up the same way, your budget and the actual comparisons can be done very easily. And then one more thing, scroll down to keep going. Yeah, okay, so stop right there, capital outlay. So to the extent we have capital outlay, we have that all laid out. And then our other financing sources and uses, follow from there. So again, this is a really, really good tool, and I encourage you to follow it carefully for all of your activities that you're reporting in your all of the accounting that you're doing. And if there's questions, please, be sure to bring them up. But key areas to look at: debt service funds, capital project funds. We visited a county that had tons of drainage funds, and all those drainage funds really need to be aggregated into one fund for purposes of financial reporting. So keep that in mind as we're going through the day. Okay. So that covers the state board accounts. Let me talk just a little bit about interfund activity. There's two types of activity, interfund activity. There's permanent activity, or there's reciprocal activity, I should say, and then there's non-reciprocal activity. So reciprocal activity is where you give up something and you get something back. Non-reciprocal activity, we're just going in one direction. Okay, there we go. So to the extent we have reciprocal activity, we may loan a fund. We have all kinds of technical issues here, but to the extent we loan money from one fund to another, we could have a due to or a due from. And those in our financial reporting have to balance. There might be advances. So one fund advances money to another, and that's more of a long-term nature, but again, it's reciprocal activity. Services provided by one fund and used by another. So you may have, one fund paying a certain bill or providing a service that another fund uses. Those are, again, reciprocal activities. Interfund reimbursements is a reciprocal activity. But you may have non-reciprocal activity. That's where cash from one fund is transferred and there's no payment back due. Those are called interfund transfers, and those have to be accounted for separately. The other thing to keep in mind here is pooled cash. Pooled cash is a very common approach that's used these days. But where we tend to fall into trouble is sometimes pooled cash can result in an interfund borrowing, meaning we pay a bill, but the fund really didn't have the equity to pay that bill, and it really has what would be a negative cash in that fund. And you can't really have negative cash. What those really are interfund loans. So for financial reporting, we have to address those in our reporting and reclass those to interfund loans. Moving ahead, I mentioned the financial statements. Again, we have something called the basic financial statements. The two distinct vantage points, fund financial statements and government-wide. Again, the idea is to bridge the gap between what's needed for the investors and what's needed for the governing board and the citizens. So fiscal accountability is what we're trying to achieve with the fund financial statements, where it's looking at the current operating cycle and are we spending the resources in accordance with our budget? Are we meeting our short-term goals? And then for the government-wide financial statements, we're looking at operational accountability or more of a long-term view. What are we acquiring over the long term? We have this basis of accounting, measurement focus. So the current financial statements are current measurement focus, whereas the government-wide financial statements are more of a long-term with our fixed assets and debt included. So, getting close to the break, I want to cover a few polling questions. Part of what's required in order for us to have CPE is for all of us to be engaged. And one way of being engaged, they say, is we have polling questions. So I'm going to need everyone to raise their hands to participate here. And the first polling question is, full GAAP financial statements include, and it's entity-wide statements, modified accrual, the reconciliation of the two perspectives, management's discussion and analysis, cash flows, full footnotes, and RSI. So Anybody vote for H? All of the above? Okay, good. They say that when you raise your hand, it increases your blood circulation, and by doing that, it makes me feel better. So as long as everybody raises their hand, we're good. Polling question 2. Proprietary funds are used to support business type activities. True or false? Says true. Okay. So, polling question 3. Which of the following fund types are governmental funds? Indicate all that apply. Special revenue, we know that one's a governmental fund. Enterprise, debt service, pension, general. So it's not all of the above, because enterprise doesn't belong in there, but how about G, AC&E? That sounds good, doesn't it? Okay, so we are right at the break. Let's take a 15-minute break. We'll start back up at 10 o'clock.
Thank you, Joe. Just a couple things on the break.